Let's take a quick look at the latest Eurozone inflation numbers for June 2025. As confirmed by Eurostat today, July 17, the final estimate gave us a clearer picture of the inflation trajectory across the single currency region, what it might mean for monetary policy in the coming months. The headline consumer price index for Eurozone rose by 2% in June, up by slightly from 1.9% in May. This confirmed the initial flash estimate released 2 weeks ago aligns exactly with the European Central Bank target. It's a clear sign that inflation is stabilizing after months of volatility. Looking at the breakdown, we see service inflation rose slightly from 3.2% to 3.3, making a mild rebound. Energy prices, although still in deflationary territory, eased their decline from the minus 3.6% to minus 2.7%. Non-energy industrial growth inflation slowed marginally to 0.5%, and food, alcohol, and tobacco inflation also dipped slightly to 3.1%. These movement these movements reflects a mix of ease inputs costs softening demand pressure across the board. When we strip out to the more volatile components, namely food and energy, we get the core inflation rate for June. The core inflation held steady at 2.3% year on year, the mark the lowest level since January 2022, suggesting that underlying inflation pressure are indeed cooling. This is a key metric that the ECB monitors closely. So, what does this mean for policy? Since the final numbers were fully in the line with the flash estimates, there's a little here to challenge the ECB current stance. The data reinforce expectation that the central bank will remain on pause through summer, watching how core inflation trends evolve before making any moves. Unless we see any major surprise in growth or inflation going forward, rate hikes appears to be off the table for now. Thank you for watching. Follow for more updates